Perhaps among the shares of stocks currently listed at the Philippine Stock Exchange or PSE that can be considered as a very good addition to your portfolio are from Robinson's Land Corporation or RLC. This, as RLC continues to be profitable, and continues to boost its presence in the mall industry. And this has resulted in the price of RLC shares at the Philippine Stock Exchange or PSE to surge by as much as 19% from the start of this year up to the time before the Middle East conflict started on February 28. Maybank IBG also sees RLC as well anchored for growth, citing also the resilience of its offices business. Here is what Maybank IBG said about RLC. Since our December update, the stock has risen by as much as 19%, making it among our best-performing property names. Amid uncertainties, we think RLC remains well anchored by stable mall growth coupled with resilience in its offices. RLC said it realized a net income attributable to equity holders of the parent amounting to 13.47 billion pesos for full year 2025, marking a 9% increase. This excludes one-time gains from 2024 related to the reclassification of its GoTime investment and insurance income. Meanwhile, consolidated revenues reached 48.52 billion pesos in 2025, up 13% from 2024 attributable to sustained growth across its operating businesses. Here is what Maybank IBG said on the performance of RLC in 2025. Higher mall revenue of 19.7 billion pesos, or plus 10% year-on-year, was supported by controlled utility expenses and other operational efficiencies. For fiscal year 2026 estimate, we forecast malls earnings before income tax or EBIT to grow by 8% year-on-year to 8.9 billion pesos, driven by occupancy rate of 94%, mall openings, and sustained operating margins of 41%. Meanwhile, consolidated revenues reached 48.52 billion pesos in 2025, up 13% from 2024 attributable to sustained growth across its operating businesses. Maybank IBG has identified the value propositions for RLC, and we quote them as is. Number 1. RLC's balanced property portfolio consists of leasing, or malls, offices, hotels, and logistics, and property development or residential and destination estates. Number 2. Its mall business, now in its mature phase, continues to expand its broad geographical presence outside of Metro Manila as well as capitalizing on its existing estates. Number 3. Its residential business is one of the largest in the country and mainly caters to the middle income and premium segment. Number 4. Its offices compete in a more mature segment with a particular focus on the IT/BPO industry. Number 5. Its hotels and resorts aim to capture the thriving domestic and foreign tourism market. Number 6. Its logistics business is an emerging segment providing industrial leasing with presence outside of Metro Manila. Here are the upside and downside factors of RLC, according to Maybank IBG. Let us first present the upside factors. Number 1. Continued mall segment growth driven by expansion and resilient domestic consumption. Number 2. Sustained pre-sales of residential launches with project completion within the 4 to 6 year target. Number 3. Healthy leasing occupancy rates for malls and offices attributed to a growing middle class. Number 4. Improved foreign and domestic tourist arrivals may lead to higher mall foot traffic and hotel occupancy. Now, here are the downside factors, according to Maybank IBG. Number 1. Higher for longer policy rates and slower than expected project completions may lead to sales cancellations for residential projects. Number 2. artificial intelligence or AI disruptions to the information technology business process management sector may lead to company downsizing and lower office occupancy. This graph from the website of MarketWatch shows sustained climb in the price of RLC shares listed in the PSE in the past 12 months. Also, the price of Robinsons Land shares did not crash since the start of the Middle East war, even if that conflict has badly affected stock markets globally. Meanwhile, the highest close of RLC shares was only recently, or in early February at 19.20 pesos, while the lowest close was almost 1 year ago at 11.04 pesos. This clearly shows that RLC shares were on an upswing before the Middle East war broke out, and can be sustained in the next months once the conflict ends. Before the Middle East conflict started in February 28, Maybank IBG projected that the price of RLC shares will climb by as much as 21% in the next 12 months. This means that RLC shares make a good long-term investment, especially if the Middle East war ends.